Morning folks, Andrew Lockwood here. Trust you all had a good weekend and ready for the days and weeks trading. First of all, let me say thanks again for all those that have registered over the weekend and last week for the Premium Room, which now is only a week away, starts next Monday. We've had a great take up so far, so really excited about that. So thanks to all those that have done that so far. Now this week is our last week in the scheduled live streaming. So Jason and I have put a little package together over the next 5 days or so. The schedule is on the website there. So do check out what we'll be talking about. A bit of education in there as well. I'm going to be talking about a bit of technical and fundamental analysis tomorrow. Wednesday we're going to touch on the very, very important subject of the psychology of trading, but as we've mentioned last week, that's the major chunk of trading. It's not going to be, we're not going to be able to cover everything in 20 minutes or whatever we're doing, but we're going to sort of look at that. Thursday we are going to be looking at basically building your own strategy and record keeping, the essential parts that you need to do that hopefully you will take forward if you're going to take this to the next level and become a professional trader, or certainly more consistently profitable. And we're going to wrap up the week next Friday with a look at basically how I, as a professional trader, will structure my day, what I do day in, day out, what I look at, and what I do to keep me on the right path. So that's Friday next week. So do try and get on the live streams if you can to see that. And again, throughout the week now, we're going to be popping in with just any trade ideas that we might see developing. Of course, these are just little snapshots of the market. To become a consistently profitable trader, it's more than just the next trade, as it were, as I think I've mentioned last week. Okay, but today I want to touch on the subject of what I think is a key area where a lot of traders miss in their trading. They seem to a lot of traders get sort of focused just on one aspect, and really there's a much bigger picture out there that people should be looking at. So I just want to touch on that today, is what traders miss. And I'm just going to I put this PowerPoint together last year with a course that I did, and so I've just cannibalized it slightly for today. So okay, so now for those of you that have been trading for a long time, this might be a little bit basic. I might be teaching you something that you already know, and I do apologize for that, but I am trying to cater for the masses. And because obviously in this room now and people viewing on YouTube, there's a lot of diversity in terms of experience. So I'm trying to cater for all. So do bear with me if it's something that's just something you know all about. I apologise for that. If you're new to trading, I'm sure you'll find some of the things I'm going to mention here interesting, and even those experienced, I think you'll find there's something in there that maybe you can take away. Okay, so as we know, excuse me. So as we know, the FX is made up of these key currencies. Now, over the last couple of years or so, or more than that, really, we've seen the two more currencies really come into play here, and you've got the Chinese renminbi and the Mexican peso, and I think these have really grown quite considerably over the last few years, and now they shouldn't really be ignored in terms of the big pie of commodities that of Forex pairs that we trade. Now, so when you have these 8 pairs, let's look at the 8 for now and take the other 2 away from it just at the moment. These obviously equate into 28 different currency pairs that you can be trading. So those 8 pairs, if you cross them all up, there's 28 different pairs that you can be trading. Of course, there's 30 if you look at the Chinese and the Mexican against the US dollar, of course. But so what should you be trading? Now, of course, these 8 different pairs. Some are minors, some are majors. I'm going to talk about that in a moment. But I just want to show you some numbers that I found was quite staggering. And these numbers were only released this year. Last time they did this survey was back in 2013. But these numbers I think are quite interesting. The US dollar accounts for 88% of all Forex trades so far this year in 2016. So that's excuse me. So that's 88% of every Forex transaction, the US dollar is on one side of that of that trade, and that's quite considerable. And again, that shouldn't be ignored, especially if you're trading the miners. Another interesting fact here is that the euro now trades for only 31%, and that's down from 39%. So you can see where a lot of people have been focusing over the years on the euro and the dollar as their sole pair that they focus on. The euro is in decline, and people aren't actually now looking further afield for opportunities in the forex markets. But it's still, a key player. The euro dollar. As you can see here, the daily turnover, the euro dollar still accounts for 23% of all forex trades, which is 1.1 trillion euros of daily turnover. And the second most actively traded pair is the USD Japanese yen, which now is almost 18% of all forex traded pairs, 900 billion and so forth. And you can see the British pound, Aussie dollar, miserable, not miserable, 5.2%. And the Chinese yuan here, look at the one I just highlighted it in purple. That's another interesting number. That's now almost 4%. It's 4%. That's overtaken, the dollar Swiss. It's overtaken the euro pound, and even the Mexican peso against the US dollar. That is now looking at almost 2%. So these currencies should not be taken, should not be ignored these days, because there are some opportunities there. So as we know, these 28 different currency pairs are split into what we call in the industry majors and minors. So the majors, of course, are the dollar-denominated transactions. So there they are. They're the major pairs. Now the advantage of trading major pairs, if you're new to this and don't frequently trade, there's a huge advantage of trading these if you're on a smaller time frame. So, for example, these major pairs are much more actively traded. Okay, they have the most volume and liquidity. They have tighter spreads, and therefore the cost of trading is less. So, if you're trading on a smaller time frame, if you're trading on a 5-minute or 10 or 15-minute or even an hourly time frame, typically your stops are going to be closer, and your take profit targets are going to be closer. The cost of transaction, i.e. the spread, is really quite important to you. So really, that is something you should be aware of. There are opportunities, obviously, in the other in the exotic pairs, but obviously they become more expensive to trade. So anything that's not traded as a major is traded as a minor, and I just listed them there. You don't have to go through them all, but you get the idea. These are the minors, or often referred to as exotic, the exotic pairs. And conversely, these are less actively traded. They have the least volume and liquidity. And so I'm just looking at the chart here. Nick saying hi, Andrew. They have wider spreads, and the cost of the trading is greater. So I'm just seeing what's going on with the chart here. Oh, something about China. I saw that video from Tony. Very, very funny. Okay, so if you're trading the longer term time frames, then getting involved in the minors is absolutely perfectly acceptable, and it's something that I certainly would do on a longer time period. Okay. Now, one thing that you must be aware of when trading these pairs, or in fact any pairs, and that is that no single pair trades independently. They are all correlated in one way or another, and this is the crux of what I want to talk about today. Really, it's only going to be a short one, but it's basically that all pairs are correlated, and this is very key. Now, the actual measure of correlation, I think it's called the correlation coefficient, and that basically is a range between -1 and +1, where -1 is where the pairs would move in opposite directions, and +1 the pairs are heavily correlated and they move pretty much in line with each other, and 0 basically in the middle, where pairs would be not correlated at all. So what traders need to be aware of now, I think this is quite important. Traders need to be aware that if you're trading multiple time periods, that you need to keep an eye on your risk exposure. I've seen many times with traders, with multiple positions in their portfolio, and if you actually ask them, and we've done this in the past, if you actually ask them what their bias is to their portfolio, they are quite often sometimes unable to tell you which way they've positioned themselves. Do they will they be okay if the dollar collapses? Will they be okay if the dollar goes on a surge? I mean, it's so important that you know the overall bias, and people sometimes could be they have their risk exposures per currency pair, but if you've got pairs in your portfolio that are very correlated, then of course you're increasing your risk exposure at any time. So although you think you're under control with your risk, sometimes you can find yourself out of control with your risk. And the other thing to think, of course, is that with multiple pairs, you can have a portfolio that doesn't do anything. I mean, the markets can move, and everything's so negatively correlated that whatever happens, will have a positive effect to one pair and a negative effect to the other pair. So this is quite important, I think, when you are trading multiple time frames. In fact, I know there are quite a few traders that will trade literally just correlations. They will trade they will trade one pair against the other. Now, the other thing that you need to note, I think, when you're trading pairs is if you're trading the exotic pairs, you need to know what is going on the correlated pair. So if you're trading an exotic pair and you think you're going to go into an entry, well, if that's heavily correlated to the dollar yen, you need to know what's going on in the dollar yen before you get into the pair that's heavily correlated to it, because that could have a major impact on the levels that you might be getting into. You might be buying right in front of a major level in one of the major pairs, the euro against the dollar, for example. And if you're trading a pair that's heavily correlated, then that obviously is something you definitely need to be aware of. So this is a lot of information that I think many traders miss when they're trading. They're trading the exotics and the minors, is that they are correlated to some of the others, and that you should be aware of those. Okay, so what pairs are correlated to which? Well, basically, correlated moving in the same direction. These pairs tend to move in the same direction. So you've got the euro dollar, obviously the Aussie dollar, the pound dollar, and New Zealand dollar. You've got the euro Swiss, very correlated to the euro to the dollar yen. Basically, it's trading by proxy, and then you've got the Aussie dollar against the New Zealand dollar. Of course, very correlated pairs. Uncorrelated or inversely correlated, these are the ones that move in opposite directions. You've got the euro against the euro dollar against the euro Swiss. Just rattle through these now. Okay, dollar CAD is the same as the Aussie CAD. Well, we know that. Commodity currencies, dollar yen, Aussie dollar. So whether you're experienced or whether you're new to this, you need to know that these pairs do have correlations before you get involved in those. Now, I don't personally trade correlation in terms of buying one against the other because I'm taking advantage. I mean, that is a different skill set in itself, and people have been very successful doing that. But what I do in my trading, and it forms a major part of my trading, is that I look on an hourly, 4-hourly, daily time frame what currency pairs are at that moment weak against those currency pairs that are strong. And a few years ago, I had a little meter coded up for me. Now, this is not rocket science. There's loads of these type of indicators on the internet, on the web there. There's literally, I think Forex signals, FX Street and what have you. They all have these things that people call them heat maps as well. So there's loads of stuff out there. I'm not in the business of dropping EAs into the site here where people can say it's a load of old rubbish and a load of old great stuff, and I get thousands of people saying they want a copy of the EA, and then all of a sudden I'm on the forums about how good it is or how bad it is, and I'm not really in the business of doing that. So if you are interested in doing something like that, please go and search these meters out there. There's loads of them out there, and as I say, it's not rocket science. There's two ways of the calculations. I tend to use a moving average related one. It's very simple. It's basically based on a moving average and comparing each moving average against each other, and you can adjust the settings 20, 40, 20, 50 or whatever it is. Let's have a quick look at my what I'm doing here at the moment. So I basically have a summary table. Here if you look on the right hand side of the screen, It just basically tells me what's going on. The reason why I use this, and it's not a signal indicator, so please don't think this is something where you should be, looking at and taking your signals from that. It's not. As I mentioned, there's 28 different pairs that you could be trading in this, or 30. But there's 28 different pairs. If you're trading from one screen, I've got 6 screens here, but I only actively use 4 for trading. But if you're trading off one screen, that's a lot of stuff to be looking at. Looking to get your advantage. So I use this to save my eyes, to save my screen time, rather than me looking at 28 different screens. I look at this to summarise what is going on in the market. And as I say, it's not an indicator. I'll look at this in the mornings or throughout the day, and I'll see what's whatever is particularly strong at the moment. I mean, at the moment this is live, and there's nothing really going on at the moment. There's a lot of consolidation going on, of course, because we've had the dollar pull back now from last week's highs, and hopefully that continues, because I'm a trend continuation follower, and I want to see this consolidation, which gives me an opportunity to get into the trend if it does indeed continue. I don't tend to look at the left hand side of this. This is like the 5-minute chart. Much more important really is what's happening on the last 3 columns. You've got the hour, 4 hour, and daily. For me, if you look here, the Canadian dollar at the moment on the last hour, 4 hour, and daily, that's pretty strong at the moment. If anything, weakness, we're seeing Japanese yen. So if I was looking to pull up something at the moment, I mean, I normally like to see 4 before I start getting really excited about it. Just for this, we'll have a look at the CAD yen in a second, see if anything is going on there. I don't think anything will be going on. But you can see here that the yen on the daily was weak last week. The dollar's been strong, CAD's been strong. So it just gives me an overview of what's going on in the market. Let's just have a quick look at the Aussie yen. I don't think anything is going to be too significant there in the Aussie yen. Okay, so there's nothing really great going on there at the moment. Obviously, the Aussie yen was strong all last week. We've seen some good moves in the Aussie. I beg your pardon. Yeah, Aussie yen's been strong all week last week, and a bit of pullback at the moment. So there's nothing really going on there at the moment. If I'm a trend continuation player, I'd maybe look to get in long in here, but I haven't done my analysis on this pair yet at the moment, so I won't be doing that. But that's basically how I would use the my pair there. Another thing I would look at is these lines on the side here. I've obscured them with my summary table, but this gives me an indication of what's happening real time on the 1 hour chart. So you can look here, this purple line at the moment is heading down, which means although the Canadian dollar is strong long term, it's actually there's a bit of a sell off over the last on an hourly chart, and that's reflected obviously with these 5 minutes and 15 minutes, 5 and 15 minute candles that just move there. What have you? So anything above the line is a strong currency on the hour, and anything below the line is a weaker currency on an hourly time frame. But of course, you can do the different settings. That's basically what I would do. So I think the crux of what I'm trying to say today is, be aware that pairs are related and correlated to each other, and don't just go out on a whim on one currency pair without knowing what else is going on. Look to see what's going on in the terms of strength in the market, and look to see what's going on in terms of weakness in the market. As a trend continuation player, you would tend to want to carry on with that trend and look for the strong currencies, buy the strongs and sell the weaks. And of course, if you're a counter trend trader, you could also use this as well to see what's actually changing direction. So you look what's happening on the right hand side of this, of my summary chart here, and then see what's going on in the left hand side. And of course, if the left hand side's showing opposite pictures to the right hand side, then that shows you there may be a reversal or a counter trend going on there as well. Okay, so I'm limiting this to 20 minutes this week. So I don't bore you all. Tomorrow I'm going to be talking about psychology. I'm going to talk tomorrow about technical analysis and fundamental analysis. I'll be popping in the room throughout the day. So do give me a shout if there's anything that you want to talk about. Have a good day. Jason's on later today. I'm not quite sure what timing. Of course, that schedule will be on the web there, on the site there. So do check that out as well. So I'll catch you all later, and thanks for listening.